South Africa's 2025 tax season has officially launched, with Monday, July 7th, marking the starting date for the South African Revenue Service, SARS, auto assessments to start rolling out. SARS said that auto assessments will be sent in batches over the next 2 weeks, running from July 7th to July 20th. From July 21st, the window for manual filing of tax returns by individual taxpayers, provisional and non-provisional, and trusts will open. The Revenue Service has already announced several significant changes that taxpayers need to be aware of, including a wider net for auto assessments. As previously communicated, some provisional taxpayers will be invited to take part in auto assessments in 2025. SARS announced the introduction of a new provisional taxpayer auto assessment request service to its online query system. This allows eligible provisional taxpayers who have received corresponding notifications from SARS to request inclusion in the auto assessment population for the 2025 year of assessment. All auto-assessed taxpayers will be alerted via SMS or email and should check their assessment status on e-filing or the Mobi app. Be wary of any scams or fraud, with criminal activity expected to be elevated during the filing period. Other changes revolve around South African expats who now need to indicate whether they have reinstated tax residency or not. This should also be considered by expats who do not intend to reinstate their South African residency as a sign to double-check their current status. Any expats who have left South Africa but did not formally end their tax residency could still be considered tax residents by SARS, which could lead to complications should they ever return. But these are only a few of SARS's many changes for the 2025 tax season. The service has outlined all the other changes that taxpayers should be aware of. With effect from March 1st, 2025, Section 6, Quality Income Tax Act, the ITA, has been amended to allow taxpayers to fully use foreign tax credits for the taxes paid on capital gains in the foreign jurisdiction to the same extent as the taxes paid in South Africa on the same gains. From the 2025 tax year, SARS will maintain any unused foreign tax credits to be carried forward automatically in the subsequent years of assessment, up to 6 years. Section 11, NA, and 11 NB. With effect from March 1st, 2025, employers must report Sections 11, NA, and 11 NB of the ITA details on the IRP 5/IT3A certificate. These changes will affect the ITR 12 tax return so that Section 11, NA, Source Code 4042 will be reflected on the IRP 5/IT3A tax certificate, and new Source Code 4058 relating to Section 11 NB will be reflected in the Other Deduction field. With effect from March 1st, 2025, a labor broker who received an approved certificate of exemption will be included in the definition of a provisional taxpayer. This means that these labor brokers must comply with provisional taxpayer requirements, such as submitting IRP 6 tax returns. The Section 12H of the ITA Learnership Agreement termination date has been extended from 1 April 2024 to 31 March 2027. The allowable interest expenses incurred in the production of interest received line item has been introduced within the foreign interest container of the ITR tax return to align with Practice Note 31, the ITR 12 tax return for backdated, annotated salaries and pensions has been amended to include new source codes 3623 and 3673 for Section 10, 1 of the ITA. Exemption to be applied correctly, the executor will be able to declare the interest earned date from and interest earned date to within the investment income container on the deceased estate tax return where such date exceeds the year of assessment during which the taxpayer became deceased. 2 new source codes have been introduced for local, Source Code 4306, and foreign, Source Code 4307. Dividends within the non-taxable container on the ITR 12 tax return from the 2025 tax year. SARS will apply a 50% communal estate where income from a trust is declared and the taxpayer is married in community of property. SARS will print the note given below on the ITA 34. In instances wherein used balances are not automatically carried over to the subsequent year of assessment. SARS did not consider carryover/brought forward amounts as the current return is under the verification review. Once the verification case is finalized, SARS will initiate the amendment of the return to take the carryover/brought forward amount into account. To enhance user experience with a registration, amendments, and verification form, RAV01 form, and the ITR-12 tax return, taxpayers will be presented with a list of their verified banking details available to SARS. Taxpayers must select this information when updating their bank account details rather than manually capturing it.